In Chapter 3, you learned that all the business transactions are first recorded in the journal and then they are posted in the ledger accounts. A small business may be able to record all its transactions in one book only, i.e., the journal. But as the business expands and the number of transactions becomes large, it may become cumbersome to journalize each transaction. For quick, efficient and accurate recording of business transactions, journal is subdivided into special journals. Many of the business transactions are repetitive in nature. They can be easily recorded in special journals, each meant for recording all the transactions of a similar nature. For example, all cash transactions may be recorded in one book, all credit sales transactions in another book and all credit purchases transactions in yet another book and so on. These special journals are also called day books or subsidiary books. Transactions that cannot be recorded in any special journal are recorded in journal called the journal proper. Special journals prove economical and make division of labor possible in accounting work. In this chapter we will discuss the following special purpose books. Cash book, purchases book, purchases return, return outwards, book, sales return, return inwards, book, journal proper. Recording of transactions 2-4. Learning objectives. After studying this chapter, you will be able to state the need for special purpose books. Record the transactions in cash book and post them in the ledger. Prepare the petty cash book. Record the transactions in the special purpose books. Post the entries in the special purpose book and to the ledger. Balance the ledger accounts. Rationalized 2023 to 24,100 accountancy. 4.1 Cash book. Cash book is a book in which all transactions relating to cash receipts and cash payments are recorded. It starts with the cash or bank balances at the beginning of the period. Generally, it is made on monthly basis. This is a very popular book and is maintained by all organizations, big or small, profit or not for profit. It serves the purpose of both journal as well as the ledger, cash, account. It is also called the Book of Original Entry. When a cash book is maintained, transactions of cash are not recorded in the journal, and no separate account for cash or bank is required in the ledger. 4.1.1 Single Column Cash Book. The single column cash book records all cash transactions of the business in a chronological order, i.e., it is a complete record of cash receipts and cash payments. When all receipts and payments are made in cash by a business organization only, the cash book contains only one amount column on each, debit and credit, side. The format of single column cash book is shown in figure 4.1. Cash book. Drive CR. Date receipts LF amount, date payments LF amount. Fig. 4.1. Format of single column cash book. Recording of entries in the single column cash book and its balancing is illustrated by an example. Consider the following transactions of M.S. Rupert traders. Observe how they are recorded in a single column cash book. Date details amount. 2017 November. 01 cash in hand 30,000 November. 04 cash received from Gurmeet 12,000 November. 08 insurance paid, annual installment, 6,000 November. 13 purchased furniture 13,800 November. 16 sold goods for cash 28,000 November. 17 purchased goods from Mudit in cash 17,400 November. 20 purchased stationery 1,100 November. 24 cash paid to Rukmani in full settlement of account 12,500. Rationalized 2023-24 recording of transactions, 2,101. November. 27 sold goods to Kamal for cash 18,200 November. 30 paid monthly rent 2,500 November. 30 paid salary 3,500 November. 30 deposited in bank 8,000. Rupa Traders Cash Book. Drive CR. Date receipts LF amount, date payments LF amount. 2017 November. 01 balance B, D 30,000 November. 08 insurance 6,000 November. 04 Gurmeet 12,000 November. 13 furniture 13,800 November. 16 sales 28,000 November. 17 purchases 17,400 November. 27 sales 18,200 November. 20 stationery 1,100 November. 24 Rukmani 12,500 November. 30 rent 2,500 November. 30 salary 3,500 November. 30 bank 8,000 November. 30 balance C, D 23,400 88,200 88,200. Deck. 01 balance B, D 23,400. Posting of the single column cash book as evident from figure 4.1. The left side of the cash book shows the receipts of the cash, whereas the right side of the cash book shows all the payments made in cash. The accounts appearing on then debit side for the cash book are credited in the respective ledger accounts because cash has been received in respect of them. Thus, in our example, an entry, cash received from Gurmeet, appears on the debit side of the cash book conveys that the cash has been received from Gurmeet. Therefore, in the ledger, Gurmeet's account will be credited by writing cash in the particulars column on the credit side. Similarly, all the account names appearing on the credit side of the cash book are debited as cash, check has been paid in respect of them. Now, notice how the transactions in our example are posted to the related ledger accounts. Rationalized 2023 to 24,102 Accountancy. Books of Rupa Traders Gurmeet's account. Drive CR. Date particulars J. 1.2 double column cash book. In this type of cash book, there are two columns of amount on each side of the cash book. In fact, nowadays bank transactions are very large in number. In many organizations, as far as possible, all receipts and payments are effected through bank. A businessman generally opens a current account with a bank. Bank do not allow any interest on the balance in current account but charge a small amount, called incidental charges, for the services rendered. For depositing cash, checks in the bank account, a form has to be filled, which is called a pay-in slip. Refer figure 4.2. It contains a counterfoil also which is returned to the customer, depositor, with the signature of the cashier, as receipt. The bank issues blank check forms to the account holder for withdrawing money. Refer figure 4.3. The depositor writes the name of the party to whom payment is to be made after the words pay printed on the check. Check. Rationalized 2023 to 24,104 Accountancy. Fig. 4.2. A pay-in slip. Fig. 4.3. A check. Forms have the printed word bearer, which means payment is to be made to the person whose name has been written after the words pay, or the bearer of the checks. When the word bearer is struck off by drawing a line, the check becomes an order check. It means payment is to be made to the person whose name is written on the check or to his order after proper identification. Checks are generally crossed in practice. The payment of a crossed check cannot be made direct to the party on the counter. It is to be paid only through a bank. When two parallel lines are drawn across the check, it is said to be crossed. The various types of crossing providing different degrees of safety to the payment are shown in figure 4.4. Rationalized 2023-24 recording of transactions, 105. In case of an A/C payee-only crossing, the amount of the check can be deposited only in the account of the person whose name appears on the check. When the name of the bank is written between two parallel lines, it becomes a special crossing and the payment can be made only to the bank whose name has been written between the two lines. Though this is rarely done, a check can be transferred by the payee, the person in whose favor the check has been drawn, to another person, if it is not crossed A/C payee only. A bearer check can be passed on by mere delivery. An order check can be transferred by endorsement and delivery. Endorsement means the writing of instructions to pay the check to a particular person and then signing it on the back of the check. When the number of bank transactions is large, it is convenient to have a separate amount column for bank transactions in the cash book itself instead of recording them in the journal. This helps in getting information about the position of the bank account from time to time. Just like cash transactions, all payments into the bank are recorded on the left side and all withdrawals, payments through the bank are recorded on the right side. When cash is deposited in the bank or cash is withdrawn from the bank, both the entries are recorded in the cash book. This is so because both aspects of the transaction appear in the cash book itself. When cash is paid into the bank, the amount deposited is written on the left side in the bank column and at the same time the same amount is entered on the right side in the cash column. The reverse entries are recorded when cash is withdrawn from the bank for use in the office. Against such entries the word C, which stands for contra, is written in the LF column indicating that these entries are not to be posted to the ledger account. Fig. 4.4 Types of crossing and company. Not negotiable A/C payee only State Bank of India, New Delhi. Rationalized 2023 to 24,106 Accountancy. The bank column is balanced in the same way as the cash column. However, in the bank column, there can be credit balance also because of overdraft taken from the bank. Overdraft is a situation when cash withdrawn from the bank exceeds the amount of deposit. Entries in respect of checks received should be made in the bank column of the cash book. When a check is received, it may be deposited into the bank on the same day or it may be deposited on another day. In case it is deposited on the same day, the amount is recorded in the bank column of the cash book on the receipts side. If the check is deposited on another day, in that case, on the date of receipt it is treated as cash received and hence recorded in the cash column on the receipts side. On the day of deposit to the bank, it is shown in the bank column on receipt, doctor, side and in the cash column on the payment, crossing side. This is a contra entry. If a check received from a customer is dishonored, the bank will return the dishonored check and debit the firm's account. On receipt of such check or intimation from the bank, the firm will make an entry on the credit side of the cash book by entering the amount of the dishonored check in the bank column and the name of the customer in the particulars column. This entry will restore the position prevailing before the receipt of the check from the customer and its deposit in the bank. Dishonor of a check means return of the check unpaid, generally due to insufficient funds in the customer's account with the bank. If the bank debits the firm on account of interest, commission or other charges for bank services, the entry will be made on the credit side in bank column. If the bank credits the firm's account, the entry will be made on the debit side of the cash book in the appropriate column. The format of double column cash book is shown in figure 4.5. Cash book. Drive CR date receipts LF cash bank date payments LF cash bank. Fig. 4.5. Format of a double column cash book. Rationalized 2023-24 recording of transactions, 2/107. We will now learn how the transactions are recorded in the double column cash book. Consider the following example, the following transactions related to M.S. Tools India. Date details amount. 2017 Sept. O1 bank balance 42,000 sept. O1 cash balance 15,000 sept. O4 purchased goods by check 12,000 sept. O8 sales of goods for cash 6,000 sept. 13 purchased machinery by check 5,500 sept. 16 sold goods and received check, deposited same day, 4,500 sept. 17 purchased goods from realtor in cash 17,400 sept. 20 purchased stationery by check 1,100 sept. 24 check given to Rohit 1,500 sept. 27 cash withdrawn from bank 10,000 sept. 30 rent paid by check 2,500 sept. 30 paid salary 3,500. The double column cash book based upon above business transactions will prepared as follows. Cash book. Drive CR. Date receipts LF Cash Bank. Date payments LF Cash Bank. 2017 sept. Sept. O1 balance B, D 15,000 42,000 O4 purchases 12,000 O8 sales 6,013 machine 5,516 sales 4,517 purchase 17,427 bank C 10,020 stationery 1,100 24 Rohit 1,527 cash C 10. Hence the bank column is maintained in the cash book, the bank account also is not opened in the ledger. The bank column serves the purpose of the bank account. Entries marked C, being contra entries as explained earlier, are ignored while posting from the cash book to the ledger. These entries represent debit or credit of cash account against the bank account or vice versa. We will now see how the transactions recorded in double column cash book are posted to the individual accounts. Purchases account. (4.1.3) Petty cash book. In every organization, a large number of small payments such as conveyance, cartage, postage, telegrams and other expenses, collectively recorded under miscellaneous expenses, are made. These are generally repetitive in nature. If all these payments are handled by the cashier and are recorded in the main cash book, the procedure is found to be very cumbersome. The cashier may be overburdened and the cash book may become very bulky. To avoid this, large organizations normally appoint one more cashier, petty cashier, and maintain a separate cash book to record these transactions. Such a cash book maintained by petty cashier is called petty cash book. The petty cashier works on the impressed system. Under this system, a definite sum, say backquote 2,000, is given to the petty cashier at the beginning of a certain period. This amount is called impressed amount. The petty cashier goes on making all small payments out of this impressed amount, and when he has spent the substantial portion of the impressed amount, say backquote 1,780, he gets reimbursement of the amount spent from the head cashier. Thus, he again has the full impressed amount in the beginning of the next period. The reimbursement may be made on a weekly, fortnightly or monthly basis, depending on the frequency of small payments. In certain cases, the petty cash system is operated through THE Rationalized 2023-24 110 Accountancy Main cash book itself. In such instances, the petty cash book is not maintained independently. The petty cash book generally has a number of columns for the amount on the payment side, credit, besides the first other amount column. Each of the amount columns is allotted for items of specific payments, which are most common. The last amount column is designated as miscellaneous, followed by a remarks column. In the miscellaneous column, those payments are recorded for which a separate column does not exist. In the remarks, the nature of payment is recorded. At the end of the period, all amount columns are totaled. The total amount column L shows the total amount spent and to be reimbursed. On the receipt, debit, side, there is only one amount column. Columns for the date, voucher number and particulars are common for both receipts and payments. Box 1. Advantages of maintaining petty cash book. 1. Saving of time and efforts of chief cashier. The chief cashier is not required to deal with petty disbursements. He can concentrate on cash transactions involving large amount of cash. It saves time and labor and helps chief cashier to discharge his duties more effectively too. Effective control over cash disbursements. Cash control becomes easy because of division of work. The head cashier can control big payments directly and petty payments by keeping a proper check on the petty cashier. This way the chances of making frauds and embezzlements become very difficult. 3. Convenient recording. Recording of petty disbursements in the main cash book makes it bulky and unmanageable. Further, the materiality principle requires that insignificant details need not be given in the main cash book. This way the cash book reveals only material and useful information. Recording of such small payments becomes easy as the totals of different types of expenses are posted to ledger. It also saves time and effort of posting individual items in the ledger. In nutshell, it can be stated that preparation of petty cash book is a cost reduction control measure. For example, Mr. Mohit, the petty cashier of M.S. Samira Traders, received Rs 2000 on May 1, 2017 from the head cashier. For the month, details of petty expenses are listed here under. Rationalized 2023-24 recording of transactions, 2/111. Date details amount. 2017 May 2nd Auto Fare 5503 Courier Services 4004 Postal Stamps 10505 Erasers, Sharpeners, Pencils, Pads 22506 Speed Post Charges 9808 Taxi Fare, backquote 105 plus backquote 90, 19508 Refreshments 8510 Auto Fare 6012 Registered Postal Charges 4213 Telegram 3414 Cartage 2516 Computer Stationery 16519 Bus Fare 2419 S.T.D. Call Charges 8720 Office Sanitation including Disinfectant, backquote 36 plus back second Auto Fare 5503 Courier Services 4004 Postal Stamps 10505 Erasers, Sharpeners, Pencils, Pads 22506 Speed Post Charges 9808 Taxi Fare, backquote 105 plus backquote 90, 19508 Refreshments 8510 Auto Fare 6012 Registered Postal Charges 4213 Telegram 3414 Cartage 2516 Computer Stationery 16519 Bus Fare 2419 S.T.D. Call Charges 8720 Office Sanitation including Disinfectant, backquote 36 plus backquote 24, 6022 Refreshment 4523 Photo Stating Charges 4728 Courier Services 4029 Unloading Charges 4030 Bus Fare 15. Posting from the petty cash book. The petty cash book is balanced periodically. The difference between the total receipts and total payments is the balance with the petty cashier. The balance is carried to the next period and the petty cashier is paid the amount actually spent. A petty cash account is opened in the ledger. It is debited with the amount given to petty cashier. Each expense account is individually debited with the periodic total as per the respective column by writing petty cash account, and the petty cash account is credited with the total expenditure incurred during the period by writing sundries as per petty cash book. The petty cash account is balanced. It reflects the actual cash with the petty cashier. Rationalized 2023-24-112. Accountancy. The petty cash book for the month will be prepared. 1.4 Balancing of cash book. On the left side, all cash transactions relating to cash receipts, debits, and on the right side all transactions relating to cash payments, credits, are entered date-wise. When a cash book is maintained, a separate cash book in the ledger is not opened. The cash book is balanced in the same way as an account in the ledger. But it may be noted that in the case of the cash book, there will always be debit balance because cash payments can never exceed cash receipts and cash in hand at the beginning of the period. The source document for cash receipts is generally the duplicate copy of the receipt issued by the cashier. For payment, any document, invoice, bill, receipt, etc., on the basis of which payment has been made, will serve as a source document for recording transactions in the cash book. When payment has been made, all these documents, popularly known as vouchers, are given a serial number and filed in a separate file for future reference and verification. Illustration 1. From the following transactions made by M.S. 4.2 Purchases Journal Book. All credit purchases of goods are recorded in the Purchases Journal, whereas cash purchases are recorded in the cash book. Other purchases such as purchases of office equipment, furniture, building, are recorded in the journal proper if purchased on credit or in the cash book if purchased for cash. The source documents for recording entries in the book are invoices or bills received by the firm from the supplies of the goods. Entries are made with the net amount of the invoice. Trade discount and other details of the invoice need not be recorded in this book. The format of the Purchases Journal is shown in Figure 4.6. Purchases Journal Book. Date, invoice, name of supplier, LF, amount, number. Account to be credited. Fig. 4.6. Format of Purchases Journal Book. The monthly total of the purchases book is posted to the debit of purchases account in the ledger. Individual suppliers' accounts may be posted daily. Consider the following details obtained from M.S. Kanika Traders and observe how the entries are recorded in the purchase journal. Rationalized 2023 to 24,126 Accountancy. Date details 2017 Aug. 04 purchased from M.S. Nima Elect. Posting from the Purchases Journal is done daily to their respective accounts with the relevant amounts on the credit side. The total of the Purchases Journal is periodically posted to the debit of the purchases account, normally on the monthly basis. However, if the number of transactions is very large, this total may be done and posted at some other convenient time interval such as daily, weekly or fortnightly. The posting from the Purchases Journal to the ledger from is illustrated as follows. Books of Kanika Electronics, Nima Electronics. Drive CR. Date particulars JF amount, date particulars JF amount. 27. 3. Purchases Return Journal Book. In this book, purchases return of goods are recorded. Sometimes goods purchased are returned to the supplier for various reasons, such as the goods are not of the required quality, or are defective, etc. For every return, a debit note, in duplicate, is prepared and the original one is sent to the supplier for making necessary entries in his book. The supplier may also prepare a note, which is called the credit note. The source document for recording entries in the Purchases Return Journal is generally a debit note. A debit note will contain the name of the party to whom the goods have been returned, details of the goods returned and the reason for returning the goods. Each debit note is serially numbered and dated. The format of the Purchases Return Journal is shown in Figure 4.7a. Purchases Return Journal Book. Date, debit, name of the supplier, LF, amount, note number. Account to be debited. Fig 4.7a. Format of Purchases Return Journal Book. Rationalized 2023 to 24,128 Accountancy. Box 2. Debit and credit notes. A debit note is a document evidencing a debit to be raised against a party for reasons other than sale on credit. On finding that goods supplied are not as per the terms of the order placed, the defective goods are returned to the supplier of the goods and a note is prepared to debit the supplier. Or when an additional sum is recoverable from a customer, such a note is prepared to debit the customer with the additional dues. In these two situations, the note is called a debit note, refer figure 4.7b. A credit note is prepared when a party is to be given a credit for reasons other than credit purchase. It is a common practice to make it in red ink. When goods are received back from a customer, a credit note should be sent to him. The suggested pro forma of credit note is shown in figure 4.7c. Name of the firm issuing the note. Address of the firm. No. Date of issue. Debit note. Against, supplier's name, goods returned as per delivery amount, Challan no. Details of goods returned, rupees. Only, signature of the manager with date fig. 4.7b, showing a specimen of debit note. Name of the firm issuing the note. Address of the firm. No. Date of issue. Credit note. Against, customer's name, goods returned by the customer amount, Challan no. Details of goods returned, rupees. Only, signature of the manager with date fig. 4.7c, showing a specimen credit note. Rationalized 2023-24 recording of transactions, 2/129. Refer to the Purchases Journal, Book of Kanika Traders. You will notice that 20 mini-size TVs and 15 tape recorders were bought from Nima Electronics for $182,000. However, on delivery 2 mini TVs and tape recorders were found defective and were returned back with a debit note no. 03/2017. In this case, the purchaser's return books will be prepared as follows. Purchaser's Return, Journal, Book. Date, debit, name of the supplier, LF, amount, note, account to be debited, number. 03/2017 Nima Electronics 13,200. 13,200. Posting from the purchaser's with 13,200. Posting from the Purchaser's Returns Journal requires that the supplier's individual accounts are debited with the amount of returns and the purchaser's returns account is credited with the periodical total. Nima Electronics account. Drive CR. Date particulars JF amount, date particulars JF amount. Purchaser's 13,200 return. Purchaser's return account. Drive CR. Date particulars JF amount, date particulars JF amount. Sundries as 13,200 per purchase returns book. 4.4 Sales Journal, Book. All credit sales of merchandise are recorded in the sales journal. Cash sales are recorded in the cash book. The format of the sales journal is similar to that of the purchaser's journal explained earlier. The source document for recording entries in the sales journal are sales invoice or bill issued by the firm to the customers. The date of sale, invoice number, name of the customer and amount of the invoice are recorded in the sales journal. Other details about the sales transaction including terms of payment are available in the invoice. In fact, 2 or more than 2 copies of a sales invoice are prepared for each sale. The book. Rationalized 2023 to 24,130 Accountancy. Keeper makes entries in the sales journal from 1 copy of the sales invoice. The format of the sales journal is shown in figure 4.8. In the sales journal, 1 additional column may be added to record sales tax recovered from the customer and to be paid to the government within the stipulated time. Periodically, at the end of each month, the amount column is total-led and posted to the credit of sales account in the ledger. Posting to the debit side of individual customers' accounts may be made daily. Sales Journal Book. Date, invoice, name of the customer, LF, amount, number. Account to be debited. Fig. 4.8 Format of Sales Journal Cash Book. For example, M.S. Koina supplies sold on credit. I. 2 water purifiers at $2,100 each and 5 buckets at $130 each to M.S. Raman Traders, invoice No. 178 dated April 6, 2017. E. 5 roadside containers at $4,200 each to M.S. Nutan Enterprises, invoice number 180 dated April 9, 2017. E. 100 big buckets at $850 each to M.S. Raman Traders, invoice No. 209, dated April 28, 2017. The above stated transactions will be entered in a sales journal as follows. Books of Koina Suppliers Sales Journal Book. Date, invoice, name of the customer, LF, amount, number. Account to be debited. 2017 April 6, 178 Raman Traders 4850 April 9, 180 Nutan Enterprises 21000 April 28, 209 Raman Traders 85000 April 30, 110,850. Posting from the sales journal are done to the debit of customers' accounts kept in the ledger. Like the purchasers' journal, individual customers' accounts are generally posted daily, with the amount involved. The sales journal is also totaled periodically, generally monthly, and this total is credited to sales account in the ledger. The sales journal book illustrated above will be posted in the related ledger account in the following manner. Rationalized 2023-24 recording of transactions, 131. Raman Traders account. Drive CR. 5. Sales return journal book. This journal is used to record return of goods by customers to them on credit. On receipt of goods from the customer, a credit note is prepared, like the debit note referred to earlier. The difference between the credit note and the debit note is that the former is prepared by the seller and the latter is prepared by the buyer. Like the debit note, the credit note is also prepared in duplicate and contains detail relating to the name of the customer, details of the merchandise received back and the amount. Each credit note is serially numbered and dated. The source document for recording entries in the sales return book is generally the credit note. The format of the sales return book is shown in figure 4.9. Sales return journal book. Date, credit, name of the customer, LF, amount, number. Account to be credited. Fig. 4.9 Format of sales return journal book. Rationalized 2023 to 24,132 accountancy. Refer to the sales journal book of Koina Supplier of. You will find that 2 water purifiers were sold to Raman Traders for $2,100 each, out of which 1 purifier was returned back due to the manufacturing defect. Credit note No. 10/2017. In this case, the sales return journal book will be prepared as follows. Sales return journal book. Date, credit, name of the customer, LF, amount, number. Account to be credited, 10/2017 Raman Traders 2,100. 2,100. Posting to the sales return journal requires that the customer's account be credited with the amount of returns and the sales return account be debited with the periodical total in the same way as is done in case of posting from the purchaser's journal. Raman Traders account. Drive CR. Date, particulars, JF, amount, date, particulars, JF, amount. Sales return 2,100. Sales return account. Drive CR. Date, particulars, JF, amount, date, particulars, JF, amount. Sundries 2,100 as per sales return book. Illustration 5. Enter the following transactions of 4.6 Journal proper. A book maintained to record transactions, which do not find place in special journals, is known as journal proper or journal residual. Following transactions are recorded in this journal. 1. Opening entry. In order to open new set of books in the beginning of new accounting year and record therein opening balances of assets, liabilities and capital, the opening entry is made in the journal. 2. Adjustment entries. In order to update ledger account on accrual basis, such entries are made at the end of the accounting period, such as rent outstanding, prepaid insurance, depreciation and commission received in advance. Rationalized 2023 to 24,140 accountancy. 3. Rectification entries. To rectify errors in recording transactions in the books of original entry and their posting to ledger accounts, this journal is used. 4. Transfer entries. Drawing account is transferred to capital account at the end of the accounting year. Expenses accounts and revenue accounts which are not balanced at the time of balancing are opened to record specific transactions. Accounts relating to operation of business such as sales, purchases, opening stock, income, gains and expenses, etc. and drawing are closed at the end of the year and their total balances are transferred to trading and profit and loss account by recording the journal entries. These are also called closing entries. 5. Other entries. In addition to the above mentioned entries in the points number 1 to 4, recording of the following transaction is done in the journal proper. I. At the time of a dishonor of a check, the entry for cancellation for discount received or discount allowed earlier. E. Purchase, sale of items on credit other than goods. E. Goods withdrawn by the owner for personal use. IV. Goods distributed as samples for sales promotion. V. Endorsement and dishonor of bills of exchange. V. Transaction in respect of consignment and joint venture, etc. V. Loss of goods by fire, theft, spoilage. Test your understanding. I. Select the correct answer. A. When a firm maintains a cash book, it need not maintain. I. Journal proper. E. Purchases, journal, book. E. Sales, journal, book. IV. Bank and cash account in the ledger. B. Double column cash book records. I. All transactions. E. Cash and bank transactions. E. Only cash transactions. IV. Only credit transactions. C. Goods purchased on cash are recorded in the I. Purchases, journal, book. E. Sales, journal, book. E. Cash book. IV. Purchases return, journal, book. Rationalized 2023-24 recording of transactions, 2/141. D. Cash book does not record transaction of I. Cash nature. E. Credit nature. E. Cash and credit nature. IV. None of these. A. Total of these transactions is posted in purchase account. I. Purchase of furniture. E. Cash and credit purchase. E. Purchases return. 7. Balancing the accounts. Accounts in the ledger are periodically balanced, generally at the end of the accounting period, with the object of ascertaining the net position of each amount. Balancing of an account means that the two sides are totaled and the difference between them is shown on the side which is shorter in order to make their totals equal. The words balance C, D are written against the amount of the difference between the two sides. The amount of balance is brought, B, D, down in the next accounting period, indicating that it is a continuing account, till finally settled or closed. In case the debit side exceeds the credit side, the difference is written on the credit side. If the credit side exceeds the debit side, the difference between the two appears on the debit side and is called debit and credit balance respectively. The Rationalized 2023 to 24,142 accountancy. Accounts of expenses, losses and gains, revenues are not balanced but are closed by transferring to trading and profit and loss account. The balancing of an account is illustrated below with the help of an example explaining the complete process of recording the transactions, posting to ledger and balancing thereof. Date details. Test your understanding. 2. 1. Fill in the correct words. A. Cash book is a journal. B. In journal proper, only discount is recorded. C. Return of goods purchased on credit to the suppliers will be entered in journal. D. Assets sold on credit are entered in A. Double column cash book records transaction relating to and F. Total of the debit side of cash book is then the credit side. G. Cash book does not record the transactions. H. In double column cash book, transactions are also recorded. I. Credit balance shown by a bank column in cash book is J. The amount paid to the petty cashier at the beginning of a period is known as amount. K. In purchase book goods purchased on are recorded. 2. State whether the following statements are true or false. A. Journal is a book of secondary entry. B. One debit account and more than one credit account in an entry is called compound entry. C. Assets sold on credit are entered in sales journal. D. Cash and credit purchases are entered in purchase journal. A. Cash sales are entered in sales journal. F. Cash book records transactions relating to receipts and payments. G. Ledger is a subsidiary book. H. Petty cash book is a book having record of big payments. Rationalized 2023 to 24,152 Accountancy. I. Cash received is entered on the debit side of cash book. J. Transaction recorded both on debit and credit side of cash book is known as contra entry. K. Balancing of account means total of debit and credit side. L. Credit purchase of machine is entered in purchase journal. Key terms introduced in the chapter: posting, sales, journal, book, day books, balancing of accounts, cash book, purchase, journal, book, petty cash book, purchases return, journal, book, sales return, journal, book. Summary with reference to learning objectives. 1. Journal, basic book of original entry. 2. Cash book, a book used to record all cash receipts and payments. 3. Petty cash book, a book used to record small cash payments. 4. Purchase journal, a special journal in which only credit purchases are recorded. 5. Sales journal, a special journal in which only credit sales are recorded. 6. Purchases return book, a book in which return of merchandise purchased is recorded. 7. Sales return book, a special book in which returns of merchandise sold on credit are recorded. Questions for practice. Short answers. 1. Briefly state how the cash book is both journal and a ledger. 2. What is the purpose of contra entry? 3. What are special purpose books? 4. What is petty cash book? How it is prepared? 5. Explain the meaning of posting of journal entries. 6. Define the purpose of maintaining subsidiary journal. 7. Write the difference between return inwards and return overwards. 8. What do you understand by ledger folio? 9. What is difference between trade discount and cash discount? 10. Write the process of preparing ledger from a journal. 11. What do you understand by impressed amount in petty cash book? Long answer.